2018 is almost upon us, and it's time for me to give you my top picks for the coming year. Welcome to another video. If you have any questions, drop a comment. If you want more videos from me, hit subscribe. So I think ETFs are a great way to get invested in the stock market, and these are 10 ETFs that I think will do especially well in 2018 and beyond for that matter. You're going to have the tickers here, the expense ratio, which is very important, and the dividend, which is also very important. I would first and foremost look at the expense ratio after you've found out which ETF you want to go with. So we're going to start off with a China Technology Index from Global X. It's a very expensive ETF, but if you want some of these more unique ETFs, such as a technology index for China, you're going to have to pay up. But it does balance it out with a massive dividend. There's a lot of growth in China, and especially in the tech sector. Great play. This is going to be my favorite ETF, period. It's Vanguard High Dividend Yield. It's pretty much as cheap as an ETF can get. Only Vanguard has ETFs this cheap, and look at the massive dividend. This is a US index. It's not the S&P, but it's almost S&P 500, just a little bit better in my opinion. Emerging Asia, again that's from SPDR. Still pretty expensive, but it is a quite unique ETF. There's not a lot of Emerging Asia ETF. Most of the ETFs in Asia are either Japan or China. So this is going to be Indonesia, Philippines, China, and India, not Japan and South Korea. Pretty good dividend still. Next one is going to be a very special one. It's Financial Technology, or aka Fintech. It's another expensive one from Global X. Global X is the company providing the most unique and sort of niche market ETFs. Financial technology is basically payments. So companies like Visa and Square, MasterCard, PayPal, etc. Very good industry, booming at the moment. A lot of change, especially with cryptocurrencies and digital payments and such. Quite expensive, and unfortunately no dividend. Moving on to the Vanguard Asia-Pacific ETF. Pretty much the go-to ETF for Asia. It's the cheapest you can get. Also 2.6% dividend, which is massive. This is going to be the whole of Asia, but it's obviously mostly going to be China and some Japan in there, I believe. Vanguard Emerging Markets, the go-to emerging market ETF. Very, very cheap, great dividend. So this is going to be emerging Europe as well as emerging Asia. Maybe some Brazil in there as well, but of course no US and not a lot of Western Europe in there. Another expensive ETF from Global X. Once again, this is the Artificial Intelligence and Robotics ETF. I'm personally invested in this one. It's pretty much, in my opinion, maybe the most important industry right now. This is all about automation of manufacturing and artificial intelligence and autonomous driving and such. So a lot of very important technology companies in there. Vanguard Information Technology ETF. This is my go-to tech ETF for the US. It's pretty much the NASDAQ. But again, since it's Vanguard, it's the cheapest, and it has a pretty good dividend of 1%. I think the tech sector will generally outperform the general market. So this is a good ETF to look for after you have some money in the classic S&P 500 ETFs. This is going to be Pdr Biotech, another very up and down industry, but booming at the moment. Very little dividend to speak of. Biotech companies are generally smaller companies, very risky, a lot of growth, but very up and down, depending on what sort of licenses they get for drugs and gene testing and stuff. So a very risky industry, but good potential for growth and not too expensive actually. The last one is going to be iShares Select Dividend. So these are going to be selected US dividend paying companies. It's pretty much as cheap as possible, and it has the highest dividend together with QQC. So cheap, great dividend. You know, this is basically your go-to dividend ETF for US if you want a really high yield. So these are 10 I definitely think are going to outperform the general market for 2018. Now remember, ETFs are not going to blow it out of the water. They're not going to do 30-40% a year, but you can definitely get up towards 15-20% in a good year and put the dividend on top of that, and you have yourself a great year. So let me know if you're invested in any of these, or you're looking into buying one of them, or if there's any ETFs you think are going to do well in 2018. As always, if you want to know more about ETFs or my personal favorites, visit investingforall.net. If not, I'll see you in the next video.